That's good. So I guess we're gonna start so other people might join during the meeting. So yeah, good evening everyone. And today we actually have a special guest. His name is Ryan, and he's gonna tell us a bit about a good way to invest into small companies, so even startups. So I don't want to say anything wrong about it. So like I'm gonna ask Ryan if you can like just maybe do a brief introduction about yourself and tell us about like what you do and your business and how we can take part of it.
All right, sounds good. Thanks, Bryce. My name is Ryan Correa. I'm one of the co-founders of Equivesto. Equivesto is a Canadian equity crowdfunding platform. So equity crowdfunding is a really interesting thing. It's not like the crowdfunding you've heard of before, like Kickstarter or Indiegogo. Those sites, you sort of pre-purchase a product, but at the end of the day, you're only getting a product. Sites like GoFundMe are more of a donation-based site, so you're contributing towards a cause, but there's really no return. Equity crowdfunding is the mix of crowdfunding and the actual investment process. So you pool capital together, and you're actually buying an equity stake in a business. So we set this up starting all the way back in 2017 is when we found this idea, and it was happening around the world in about 4 or 5 major hubs. The UK, the US, and Israel were some of the bigger players who have been doing this for about 7 years now. But the rules in Canada are really slow. Our banking systems are really outdated. We really want to take things slow in order to protect investors. So the rules in Canada only changed back in 2017. So my co-founder and I found this new concept, and we said, hey, we need to bring this to Canada to give regular people the opportunity to invest in private equity. So essentially what this allows is for you and myself to put in as little as $100 into a private organization. The difference between that and the public markets is, there's a lot more risks involved in the private space, but also the potential for better returns. The public markets are well situated. You know about the TSX, you know about the different stock exchanges, and there you could exchange products very quickly. You buy Tesla stock in 1 minute and you could sell it in the next. For us, it's more about supporting the causes and the local businesses you believe in, and providing an opportunity for regular investors like you and myself to actively buy equity into these companies. So, Bryce, I guess the better way for me to explain this is probably through questions you may have thought of yourself when you were first heard about our company. Like, what are some of the main things that you want to know about Equivesto?
So one thing that would be really interesting for us is to take a look at it as investors, right? So we see that there is a great opportunity to invest, right, in just small companies that people might not even have heard of, right? So that would be really interesting just to know how do we like take part of it, right? So where do we start? What do we have to do? And also
Absolutely.
maybe to know about the companies as well that are listed, right?
Great. Yeah. So our job, we're the intermediary. We're the broker between the businesses and the investors. So we set up a platform, an online location where people could sign in. So it's equivesto.com. Let me share my screen. Maybe that could help.
Just one thing, guys, if you have questions, please send them to the chat as well.
Awesome. Yeah, so it's at equivesto.com is our main marketing site. So our marketing site is sort of the layer before you get to the portal. And this is where we provide as much educational material about what our company does, different sort of high-level information about what it is to be an investor, what it is to be a company on our platform. Because at the end of the day, we're a marketplace application, and it's very, very new to the Canadian market. And a lot of people don't quite understand it, or they want to learn more, and they need that information. So our marketing location, equivesto.com, is really where we try to provide as much of that information as possible. So if you're looking to, say, participate and invest in an early stage business, the only way you're legally allowed to invest in companies in Canada, in private companies in Canada, are one, if you're accredited. So that's an individual who has over $1 million in assets or is making over $200,000 a year. There's really high criteria in Canada. Or the other alternative is to work through a licensed broker like ourselves to purchase through something called an exemption. So equity crowdfunding is one of those exemptions. So by participating through a site like ours, you're able to legally buy into private organizations just like the accredited individuals are. So firstly, we're 100% Canadian, and we operate in 4 provinces right now: Ontario, BC, Alberta, and Nova Scotia. So if you're from one of those 4 regions, you're allowed to invest. We're trying to expand to further regions and also allow for international investment. But right now, Canadian securities law is province to province, and so it takes a great deal of time and money to really get into these different areas. We're trying to get to Quebec is our next big step, but getting everything in French is one of our big hurdles, as only one of our members of our team speaks French. So we're trying our best to get there. It's going to take some time. So talking a little bit about equity crowdfunding, for us, it's about providing as low of barriers to entry as possible for both investors and companies. So for most private equity deals or private angel investment deals, your average ticket price is probably $10,000 and above. So to buy into a startup, they're going to ask, at minimum, we're going to take $10,000 or you're not in. That to us is really prohibitive of what normal people can afford. If I wanted to go and invest in a startup, I probably don't have that type of money. So we really wanted to bring that barrier as low as possible. And so we actually lowered it to as little as $100. Company to company, it can be different. Some companies might require a little bit more, might require a little bit less, but we really try to keep that minimum as low as possible just to allow as many people as possible to participate. On the company side, we raise up to 1.5 million for organizations, and this can be on an annual basis. So if you're raising more money, and if you're a company who's looking for capital and you're looking for equity as an option, definitely check us out. You could look at it on our site, and we're happy to chat about you if you're applicable. But for today's discussion, I'm thinking, let's just talk about the investor side. So investors it's really about, democratizing the private space, meaning allowing as many people as possible access to this type of opportunity. So it's really, really simple to set up a profile on our site. We're a licensed exempt market dealer. So much like a bank, you have to set up an account with us where you need to get approved before you could access certain types of deals. So it's as simple as putting in a little bit of information, and Bryce has already gone through some of these steps. The due diligence process is a little long. It is about a 3 to 5 minute form that you have to fill out. But it's really designed to let us help you determine the thresholds in which you want to take on these high risk type of deals, because startup investing is high risk. Startups fail all the time, and it's really binary. One deal could be successful and the other deal can fail, and it really depends on timing, the market opportunity, a whole bunch of factors. And really, we tell the investors on our site to diversify as much as possible in order to protect themselves from these types of risks. Because instead, if you had, say, $1,000 in your pocket to invest in these type of deals, instead of putting $1,000 towards one company, which you think is great, which is good too, but we highly suggest that you spread that $1,000 amongst maybe 10 companies with $100. It's just a safer sort of mechanism in order for you to diversify your portfolio. Then you go to our actual portal, and then you're able to explore offerings. So look through the different types of deals that are listed on our site. There, it's sort of like a catalog of the different opportunities. Right now, we have 2 active deals. We just closed our first successful round. It was a junior mining company called Element 79. Let me jump there. Actually, that'll be the best way you can visualize this. So let's take a look at the portal. Okay, so these are a few of the deals that are currently active. So these two are two active opportunities that are on our site, and This is one that we just closed. So Element 79 is a gold organization. They are from BC, but they did their operations in Ontario. Their junior mining company had a really great and solid team. Let me just log in so you can take a look. Let me sign in via LinkedIn. And actually, oh, this is on Chrome, so
You can hide your screen if you want, just to make sure.
No, my issue is that my passwords are all saved on my Safari, and I never use Chrome. Let me see if I could figure out my password.
So again, guys, for some of you that just joined, if you have any questions for Ryan, you can just write them in the chat. So yeah, we can discuss about it later.
Okay. Anywho, yeah. So if we go into browse opportunity offerings, yeah, and you could take a look at this.
So just to make sure, Ryan, so this is what we see like if we go through the entire process of joining as an investor, right?
Yeah. Sorry, I could walk you through the dashboard afterwards, but the really exciting part is seeing the spread of the deals, right? And what I wanted to show you was specifically one deal. So you go to our site and you sign up and you create a profile and okay, let's go back to the dashboard. And you sort of come to a dashboard location where this is spreading all your information. This account is a brand new account, so it hasn't really made any investments, but this is the location where you're going to get different sort of high level information about the investments that you make on our website. Not your total investment portfolio, but just the investments that happen on our website. So the thing about equity crowdfunding is it's just not limited to straight common shares. Sometimes there's preferred shares or other types of shares that provide some level of consistent return. So we actually have a distribution mechanism in order for our platform to monitor repayments. So say you bought some preferred shares or you bought some safe agreement or convertible debt. This is the location where it would show your consistent returns, saying, hey, you're going to get 1% back until the principal is paid, and then it converts into equity. There's a whole bunch of complicated stuff, but essentially this is the location where you would come to see your portfolio. But the really fun parts are looking through the different types of deals. So right now on our site, there's three deals that are available. One just closed, and like I was mentioning before, I wanted to walk you through sort of how they're laid out. So it's very campaign based. Think Kickstarter. So if you've gone on Kickstarter before, they're laid out in this very consistent format, very familiar format, where you could go and look through the different parts of the company, read about the details surrounding a company, and determine for yourself whether or not it's something you are willing to invest in. So we provide a place where you could ask questions if you need them. And really look through the details of a specific deal and determine whether or not you think this is the right choice. Like I mentioned before. Yeah, go ahead.
Sorry to interrupt. So if I have to ask a question, is the question going to you or going to the founders of the company, or?
So this is going to the founders of the company. So we're an intermediary. This question is going to them. They could answer you directly, or they also have a location where they can answer Q&A on a public setting if they feel it's like nobody asked this company a question that was worth answering to everyone. But like if it's something that they're getting a lot of questions about, then they'll convert it into a Q&A and post about it. So yeah, this is really about you trying to engage with the organization, the founders. People who are raising in this manner are really open to conversation. They really want to, they want to talk to their investors, get to know their investors, and their investors are usually part of their community. So a lot of what we're seeing is the companies that come to us with a community. They have a following, they have a group that supports them, and that group provides at least 50% in most cases of the capital of their total amount. So this group was looking for $25,000 and they actually raised $41,000. There's also very specific, hyper-specific things like their pitch deck, incorporation documents, offering documents, so very legally things that you could read through if you want. But some people don't read that even. They mostly focus on the high-level points, and then obviously learning about the founders is another great way to figure out whether or not this is the type of investment for you. But for us, as a platform, we're trying our best not to put sort of lead our investors in any direction. We're really just there to validate that these companies are legitimate. So we do our due diligence on these companies heavily. We help set the valuation for these organizations so they're fair. And then we post it and let the market decide and let the market determine, and with their dollar, whether or not these companies are worthy of investment. So if they don't reach their 25,000 minimum goal, all the money is refunded. So say that at the end of a 30 or 90-day campaign, they only reach $24,999. Every single dollar will be refunded to the investors without any penalty, and this group would have to try again if they want to seek investment. So it's really about protecting the investors as much as possible. Okay, so let's go back to the browse offerings. Yeah, so this location, yeah, you could obviously filter things like companies that are ending soon. Right now, there's not that many companies. We're a new company, and so we only got licensed about a year ago, or half a year ago, and now it's really about getting as many companies on our platform as quick as possible. And we've been realizing there's been a mass influx of organizations looking for capital, obviously due to COVID. COVID has affected a lot of small businesses and startups, and angel investment is really not there anymore. A lot of angels are not applying their capital towards new business, and they're really just only looking internally to the companies that they already have on their portfolio. So equity crowdfunding is one of the few options for companies who can't afford, say, debt or angel investment. And really, there's some great opportunities out there that are coming down the line. We have a few more companies launching this week, a few more launching in the next few weeks. So it's definitely an interesting space to be in during this time period. But yeah, these are two of the other companies. One's a eco coffee company, and the other one is a marketplace application for, much like TaskRabbit, where people and contractors are able to essentially sell their service on an online format with wholesale sort of management from delivery to procurement of the items needed in that contracting. So really, really cool businesses.
Just Ryan, there is a question. It's actually on the other side, so not on the investment side. Okay. But is there any charge for the companies to join the platform?
Absolutely. Yeah. So that's how we make the money. So investors, it's 100% free. But for companies, we take a 7% of a successful round. So we're incentivized to get deals essentially closed. So for us, it's really about finding a valuation point that's fair for investors and for the company, so that they're at least not diluting themselves too much, but they're still able to successfully get the capital they need in order to get to the next stage. So for us, yeah, we take 7% of a successful deal. And if it's not successful, we make no money. There's a due diligence cost to signing up on the platform. So we actually have to go for a company who's signing up, we actually have to look into each of the, let me go back to this, each of the stakeholders of a company. So if you're a principal of an organization, if you're an owner, a beneficiary of a business, we have to look into the details of those individuals, just to make sure they're legitimate. We run KYC and AML, and making sure there's no fraudulent action, and after they sort of pass that process, and it's $2,500 to do that, then it's simply based on a success fee, and then there's no other fees besides that. Investors, 100% free. For $100 you put in, you get $100 worth of equity, and we charge the company afterwards on that 7%. So we're really trying to put as much equity as possible in the investors' hands, and that's really where we're trying to distribute the power, because equity is power, and really providing that opportunity to investors is our biggest stake.
So one thing now, because Sophia just asked a question just about like the, let's say if I have to put money in, right? So I have to put like $100, and let's say the round closes, they have their money. So what's gonna happen after for me as an investor?
Yeah, so there are two levels of things. There's the legal requirements that they're sort of required to do by the government, and then there's what they choose to do as an organization. So the legal requirements are they have to give you quarterly updates, and they have to put you on some sort of legal cap table. So a virtual location, or some sort of digital location where you can visualize your stock in the business. So the relationship with Equivesto, in particular, in context of that specific company, is more or less over. What you're really doing is you've become a shareholder in that business, and your protections are based on the shareholders agreement specific to that company, and each company has their own shareholders agreements. So what we use is something called a joinder agreement, and I know that where I'm getting a little complicated, and that's why we provide as much education as possible. We created an entire learning center to give investors the opportunity to understand what I'm talking about, because the private space is a very complicated space, but it's also where the most money in the world is made. All the rich people in the world have made their money in the private markets. And sadly, this has been closed off to a lot of investors. So what we're trying to do is really, really get into the educational aspect of giving everyone the understanding of how to do this and how to do this right. So yeah, so it really comes down to the shareholders agreement specific to each of those companies. Those companies can have different clauses about your voting or non-voting rights. Some companies give voting shares, some companies don't give voting shares. It's really about making sure that you're aligned with those founders. Those founders are usually, if this type of investment is a mix of an actual investment in something that you're hoping for return, but also in something that you believe in a company and a cause that you believe in. It's a sort of hybrid of those two feelings. So if you're looking to put, like, if you say your total investment portfolio was $100 or $1,000, it was $1,000. We wouldn't say take all $1,000 and put it in the private space like this. We would say take a small portion of that, maybe $100, and put it towards these sort of high risk opportunities, just to give it a chance. These are very binary, like I mentioned before, really risky opportunities. But if you find the right deal, the right opportunity that is aligned with something, like if it's a local company and you know the founders, or you have seen them in the past, or it's a brand you subscribe to, like some of the best examples of successful deals globally are breweries. There's a company in the UK called Brewdogs, who have listed on a UK site like ours called Crowdcube, and have raised 4 successful equity crowdfunding rounds in succession, eventually selling to a private equity firm, a larger alcohol company, for hundreds of millions of dollars. And those founders really look to their own community, their own supporters, the people who drank their beer, and sold shares to them and said, hey, I want to reward my community members by giving them equity in my business and giving them the opportunity to buy equity into my business. Mm-hmm. So that's what the site is really going to be successful in, is finding local businesses and finding the communities that surround these local businesses to help them support each other. And in a time period like now, we're finding that's really starting to grow. There's a lot of struggling companies, and they're looking for capital. And the only way they could turn, only location they could turn, the government grants are ending. The only location they could really turn is to their fellow people and the people who are in their community. So
just one thing. So like basically in the learning part of your website, is there anything about like the return on the investment? How does it work? Let's say if I'm getting shares after, like, what's the like, can I sell those shares on the website, or like, is it more, what do I do like after in the future, right? After a few years, as you
absolutely. So that's like I mentioned before, that's very deal specific. So each company can be selling a different type of share. They can be doing very different things in terms of their projections for where their company wants to go. Like some companies, they want to create a dividend mechanism. So they will never sell their company, but all that they really want to do is, provide consistent dividends to their investors. Company B might actually want to sell the company in the future or go IPO eventually. So the first company that listed on our site, that gold company, in their projections, the reason why they're running this round was they're planning on going IPO very soon. So the whole point of the equity crowdfunding round was actually to meet a very specific minimum. You need 120 investors before you could list on any exchange. So they came to us and they said, equity crowdfunding is the perfect fit for us. We need 120 investors on our cap table before we can go list on an exchange. Can you help us do that? And so we helped them get to that point. And now every single one of their investors can exit almost immediately when they hit IPO, because then they could sell their shares on a public exchange and others can buy in that exchange. So that's one really excellent way that you get return. Not many companies are obviously not many, but not every company is going to look to go IPO immediately. If it's a startup, it could be many years. It could be 5 years before they even do any of these liquidity events. So the sale of a company, the IPO, the dividend model, sometimes, they really have to make return or profit usually before any of these events can happen in most cases. So it's really about reading that document quite well, understanding the goals of the company, and from deal to deal, determining for yourself if that is the right type of investment, because not all deals are the same. And that's why we have this site. Is it's different than auto investing or robo advising, where you sort of, you don't think and you just put $100 a week and it all of a sudden does something. Here we're trying to provide the educational tools to make everyone here and everyone on our site, and the definition we like to use is feel like a dragon. Feel like a dragon on Dragon's Den. Feel like a shark on Shark's Tank. You get to make that assessment yourself. You get to read their pitch deck. You get to read their business plan, their financials, and say, hey, this doesn't make sense, or this does make sense, and determine for yourself if you want to buy a few shares. So that's really what we're all about, is putting as many of those companies on the site and letting you guys determine whether or not this is right.
Mm-hmm. All right, that's good. Thank you very much, Ryan. So, guys, if you have any questions, last minute questions, if you can just send them in the chat. I think that was really, really interesting. So, like, just to know about, first of all, how to invest into private companies. So it's kind of a really new opportunity. As Ryan mentioned, they started like recently, and the thing is that basically, I guess no one else in Canada is doing it, right? So it's really a good opportunity to take a look at the website, see how you can invest in it, and like there is also a big part about the learning and doing the due diligence, right? So looking at those companies, see if it's good opportunities, if it matches you. But at the same time, I'll share the website with you in the group. So if you guys are interested, you can go take a look, see what's up there. And if you guys have any questions, you can just like ask it directly to me, and I can refer you to Ryan or I guess someone else in your company. But yeah, I can probably give you more details if it's needed. So thanks again, Ryan. And
Yeah.
it seems that no one else has questions. So thanks everyone, and enjoy the rest of the evening.
Thanks a lot, Bryce. Thanks, everyone.